Welcome to Think Money with Benny. Here on the channel, we talk about investing in the stock market to produce passive income. If you're new here, I talk about how I grow my portfolio, what strategies I use, which stocks I invest in. That's what my content is all about. If this interests you, click the subscribe button so you don't miss any of my upcoming videos. And don't forget to hit the like button to help support the channel. I hope everyone had a good time during the holidays. I took a little vacation with the family, but I am back and ready to get to work. For my first video in 2021, I want to start by reviewing my Fidelity portfolio as we look ahead to the new year. I like to be transparent, being that I find it valuable when others are transparent as well. Many people will talk about this and that, but won't show their numbers. How can you trust anything they say? You can't. So with that being said, let's jump straight into it. As it stands today, the account is sitting at 116K. Now, before I get into my holdings, let's go over my dividends received for the past month of December. Remember, dividends are cash payments you receive just for being a shareholder of your favorite companies. Think about this. Picture owning a portfolio large enough that it covers your monthly expenses. That's the goal on this channel, and that's the dream I'm pursuing. I know it's possible. I know it will happen because I'm going to make it happen. How am I going to do that? By putting in the work. Now let's get it. So in the month of December, I received $196.51 in dividends. How did I get this money? On December 8th, I got $20.20 from Johnson & Johnson. On the 10th, I got $6.72 from Mr. Softy. On the 11th, I got $20 special dividend from Costco. On the 14th, I got $48.51 from 3M. The following day, I got $76.50 from Con Edison. On Christmas Eve, I got a present from VYM, $16.16. On New Year's Eve, I got $8.42 from the Triple Qs. Now, what do I do with this extra money? Am I going out to splurge? No. I'm either reinvesting this money to buy more stocks or holding it as cash for the next opportunity. With that being said, let's get to the holdings in my account. First up is my cash position, and as of right now, 30K of my portfolio is sitting in cash. I always talk about how important it is to keep cash ready. Why do I keep a large cash amount? For many reasons. I'll be prepared to buy a dip and ready to take advantage of any opportunity. I can also sell cash secured puts. It also lets me sleep well at night, knowing if I have an emergency, I won't have to sell any of my stocks. It gives me a nice cushion and safety net. That way, if we have another crash or correction, which I'm sure will happen, I won't need to panic or make irrational moves. My first company in my portfolio is Apple, AAPL. I'm holding 130 shares at an average cost of 102. Apple is my favorite stock to own, and that's why it's my biggest holding, currently up 30%. If you don't own Apple shares, it needs to be in your portfolio. Number 2 is Wynn Resorts, WYNN. I bought 100 shares late November as a recovery play before the vaccine was announced. We can see it's taken off since, and I'm confident this company will succeed as things return to normal. I can't wait until Wynn reinstates their dividend, which means more money coming into my portfolio. Number 3 is Starbucks, SBUX, currently holding 75 shares. We all know this is America's legal dope house. As long as that's happening, I will continue to hold this stock. I've been waiting for a dip under 100 to complete 100 shares, but let's see what happens in the coming weeks. And number 4 is one of my ETFs, the Triple Qs. Just 15 shares at the moment, and the reason I own this ETF is because I would love to own Amazon, Facebook, Google, and of course Tesla, but it would be too many stocks for me to keep up with. QQQ allows me to have exposure to all of these stocks all under one roof. Coming in at number 5 is Mr. Softy, MSFT, with only 15 shares at an average cost of $179. Microsoft is one of my favorite stocks, and I really do need to increase the amount of shares that I own. However, I have been day trading Microsoft, buying 100 shares, jumping in and out multiple times, locking in profits. Of course, you can only do that once your account size is over 25K, labeled as a pattern day trader, and as type margin. If you're interested in learning about margin accounts, and how to avoid trading violations, I made a video talking about it. The link will be up above and down in the description. I don't try to do anything too crazy with day trading. I usually aim to make about $100 a day. Nice and simple. Right now, the stock I feel comfortable jumping into is Microsoft. It's been 5 trading days into 2021, and I've banked 530 so far from day trading Softy. Number 6 is J&J, 20 shares at 135. It just seems like I can never get a chance to lower my cost basis with this stock. It's been a silent climber, currently sitting at 160 a share. I might have no choice but to average up and perhaps buy 5 shares here, 5 shares there. J&J is a great dividend company to hold on to forever. Number 7 is my favorite pharma stock, AbbVie, ABBV. I currently own 100 shares at 103. The dividend on this company was just raised by 10% to $1.30 per share. It's a solid company, a great stock to buy, but do your own research. Next up is Pepsi stock, PEP. Right now holding 28 shares with an average cost of 131. It's another stock I've been trying to pick up more shares of, but the price just doesn't budge much. A silent climber just like Starbucks, just like J&J. Another great dividend play to have in your portfolio for consistent income. Coming in at number 9 is my industrial play 3M, ticker MMM. Currently holding 40 shares at 157. There was just an article released about the share price being cut by analysts, but I see this as a buying opportunity to build out this position. Number 10 is my second ETF holding, VYM, which is a great dividend ETF in my opinion. It has a big exposure to JPM Chase, which is one of the stocks I regret selling as I was trying to get in lower under 97, but it just took off on me. That was a learning experience there for sure. So I'm at 20 shares right now, and for new investors, I highly recommend investing into this ETF if you want to play things conservatively. Last on my list is my only holding in the red, and it is my spec play Beyond Meat, BYND. I own 100 shares at $1.40, currently down 16%. Definitely not looking pretty, but I will be writing this one out, holding it for as long as I need to. I believe more people are getting educated on the food they eat and are looking for healthier diets. Beyond Meat has the potential to do big things going into the future, in my opinion. I have been selling covered calls and trading this stock the past couple of weeks, so I do have about 1,000 locked in profit from Beyond Meat, so the paper loss is not as bad as it looks. My only question is, at what price should I average into this stock? So to wrap up my portfolio review, I think I am investing a little conservatively here. Besides my play with Beyond Meat, I can get a little bit more aggressive if I wanted to, but at the moment I feel I'm comfortable where I'm at. I will be looking to keep funding my portfolio as much as I can this year as I aim to hit my goal of 200K. If you have a question that you'd like me to answer, just comment down below and I'll answer it in my next video. I hope you got value from watching this video. If you did, go ahead and smash that like button, subscribe if you haven't already, and I will see you in the next one. Peace.